Welcome back. We're going to get into it. I've just had a week off and a winning month in November. It's about 7% I secured in profit. And took two trades today after a week off. And first one I closed just above break even for a minimal profit of £7.93. And the second one we hit stop loss for 120 pips and £118, as you can see, 117.77. So we're going to go through each of the trades, the ideas behind them, and where I could have improved, what I did wrong, and psychology around my ideas for entering. So our first trade of the day was on the Nasdaq, which very frustratingly has actually hit TP, as you can see right now. So yeah, the idea behind it, I was looking just before at the London session. We had relative equal highs created. Well, no, it was in the London session that I entered this. So we had relative equal highs between Asia high and the London high. And on the hourly chart, we had this big imbalance here and previous daily high, as you can see. So in terms of draws downwards, we had all this, and I just didn't really feel like price needed to go down. There's no imbalance there. This imbalance has been filled. We've got this order block here, and yeah, it was just one of those. I felt quite bullish today, and so in terms of my entry, we had the entry criteria: 15-minute inverse fair value gap here, followed by the breaker structure with the fair value gap here. Drew that out, and my entry was here. So the original trade looked like this with the previous daily high and just below the inverse. This was the one that I closed early as it came back down, because I had a feeling that due to like the time of the day, it was I wasn't really getting the reaction that I wanted or was expecting to see. So like what we see here, we got massive reaction upwards, which is really good bullish sign compared to this. We trade back into this fair value gap. Little reaction up, don't really clear this. I was ideally looking for price to come up here first and sweep these two highs. Then I would have happily closed it at that point just to secure some profits. So yeah, pretty much you can see price came down below the inverse fair value gap and I would have been stopped out. So either way, this was the correct move. I think the takeaway on this, just give a bit more room under the inverse fair value gap with the stop, because it tends to be the case that, you get wicked out and then price continues up in your direction when the model plays out. So yeah, that's the first trade. If we have a look on the 5 minute for it, how many pips underneath is that? So that's what, 25,173, 25,161 before it started coming back up again. There was a further sweep lower just here, just to take everyone out again. It was kind of like not choppy, but just like very aggressive price action today, like making sure that people were getting taken out. And ultimately, I just wasn't positioned correctly. So yeah, I didn't take either of these two. So I lined these up on the Nasdaq just to see how it would play out. I was thinking of possibly doing this one, and I'll get into that reason why. But my second trade was on the S&P. So you can see here is a bit of a cleaner breaker structure here. I suppose we've already broken structure here. So this is the breaker structure down here. But I didn't quite like the reaction there. So I was also at my desk. I was quite busy today. And I basically missed this. So it was a bit of a late entry. But nonetheless, still in line with my entry criteria. The only thing missing today was I believe, the higher time frame point of interest. Like, if we go on the 4 hour, it's nothing really there. And I was looking at this in general, just like, okay, So we still got these targets in mind. If we look at the NASDAQ, still got these targets in mind. Up here, we've got these equal highs, this here, and this higher time frame point of interest, which is the 4-hour fair value gap, which ultimately I do think price will return to it. And we're on that sort of trajectory at the moment. But in terms of today's entry, the higher time frame point of interest wasn't there, so it wasn't as swift. But in the end, as you can see, it has played out and tapped previous daily high. So bittersweet. It's nothing major. But in terms of this first, I'm just going to quickly finish off this first trade actually. So with my thought process, we're looking at this. You can imagine we get this nice run. I was running about £90 profit at this point. So if we just do, what was it, 2 units? Was it 3? Yeah, 3 units on this. So it's 459 TP. I ended up trimming that. I had a meeting at work, so I trimmed that, and I also trimmed the stop to below here to about £20, £21, like that. And that eventually, it still gives me a nice risk to reward. As you can see, we just put that down there and there. So we go from like a 2.5, 2.6 to like a 5.1 risk to reward. So it's a bit smaller stakes. But I came back to my desk and we're still in the trade. We're sort of just hovering around this sort of zone here. And I decided to give my trade a bit more room, bring it back to a 1-to-1. So it was like, how much did we lose? Oh, we didn't lose on this one. So I brought it back to, I think, around here. So it was like a 1-to-1. Like so. Where is it? Come on, what am I doing? It's being not very sensitive there. Yeah, so it looked more like that when I closed just above break even, and that was, around this candle here. It was just looking like it was going to head down, and I just had that inclination. So yeah, we got out of that one. I was thinking, right, that'll be me for the day. But I was continuing to watch just to see what was happening, see what was going on during the AM session. We did have some news at 3 p.m. UK time. So I believe that's like 10 New York. And from there, you can see 10 o'clock news candle. We got this big reaction up here. Now, what I was looking at here was a bit lower time frame. I think it was a 3-minute inverse. You can see this. And this, I'm just going to move this across a little bit, actually, just for now. Can put it back. So, if I had actually taken this entry, this would have been perfect. So you see price trades up, and I'll get into the reason why I ended up trading on the S&P was because price had traded up and it was sort of hovering around here, swept these highs as mentioned before, and it was hovering around this zone, and I'd missed the entry here on this fair value gap. And yeah, because of that, I was looking at the S&P. Now, the inverse fair value gap was on a lower time frame, so I think it was more of a 1 minute. Yeah, you can see here it's a 1 minute fair value gap, less likely to hold. But nonetheless, the actual entry was within the 5 minute fair value gap here, so I went long here. And yeah, we got stopped out. So £117 stop on this. It wasn't major, you know what I mean? It's in line with my my risk management. So yeah, I gave this one a little bit more room. This stop was initially just below it, but because of, we had this candle here, I was thinking, right, give it a little bit more room. Oh, there we go. That worked. Yeah, give it a bit more room, go down a little bit more. But yeah, it still wasn't enough, and we would have got taken out even further down unless I'd brought the stop all the way down to the bottom of this wick. And then you can see there 1.39 risk to reward is not as great. Plus the S&P didn't look as bullish. Price action just didn't look as clean as the Nasdaq. Granted, the price action wasn't perfect, but you can see that it's literally come straight up, tapped it, and then we've got a reaction down. Take a breath. That's a lot to take in. Analyze it. Right. So, next up, what would have worked? What was I looking at? So we were looking at, let me take this out. If we were to get the trade entry on this, so I think it was more, I need to make a note of this because the bodies of the candles here have actually respected the inverse. Like, look at that, it's perfect. Perfect respect, we wicked into it, the body has closed above it, it's not invalidated it. That's important, I'll take that forward. But yeah, nonetheless, so the entry would have been here. That would have been ideal. We would have traded down a bit. Weather the drawdown, you know what I mean? Just deal with the drawdown, deal with the heat. It would have come quite close to stop to 25,216 to 25,210. So that's like 6 points. 6 points near the stop. So whether, you know, I would have changed my mind there or I don't know. It would have been one of those. It would have been a little bit sketchy at the time. But yeah, you can see this would have been a nice 2.15 risk to reward. We got this reaction upwards, but in my mind, I was thinking, you know, we've already seen price come down multiple times. On the 15-minute, it doesn't look so convincing, but nonetheless, in hindsight, the bodies of the candles have again respected this wick and the fair value gap on the 15-minute. 30-minute looks more like that, which is pretty nice, to be honest. And in terms of the lows, you can see we make this higher low here. Compare that to S&P, where it's much closer. So that's a little signal that, you know, the Nasdaq's a bit more bullish. As you can see, TP, no TP. So now that Nasdaq has taken the previous daily high, I wouldn't anticipate this to trade up here today, unless the PM session delivers. It might just be the case that it's a bit more delayed, but because the previous daily high has been taken here, then, you know, I'm not as interested in the S&P doing the same. So what can I take away? The timing of the trade. I think, you know, the market doesn't owe you anything. Just because something shows up doesn't mean it has to do that at that specific time. The actual range of today, 25,241 to 25,442. So that's like what, 25,240. So that's like 200 points there. So that's like that's a reasonable move. It's not like 500 points, 600 points that you're looking for price to move. That's very reasonable. On the daily chart, it's just a little candle like that. You compare that to a bigger candle like so. And yeah, it's very doable, especially with the current model or the movement that the market's in. We've seen these equal lows swept a few days ago or last week, 2 weeks ago even. Time moves quick. Forget I've had a week off. So yes, this was last week then. And yeah, I mean, there was this as well, which is kind of like a bit bearish, but whatever price needs to go down there is what it is. I don't know. So ultimately, I'm not bummed out or anything. Just a bit of a shame. I was kind of expecting a loss at some point, mainly because last month, towards the end of it, if I just go previous month on my broker statement, so we had, you know, I had one trade that I closed partial one trade that I closed above break even. So I was kind of expecting, it felt as if a loss was coming, 4 winning trades in a row. Granted, not all of them are TP. It kind of felt like it was due. Whether that's something in my psychology or, I think it subconsciously that has played an impact today. But at the same time, price has just done its thing, and I got it wrong. So I'm not going to take it to heart, you know what I mean? But yeah, entry criteria in the AM session, that is kind of key. If we note from where was this? This is 11 here. So got that pullback and then delivery across the lunch hour. What have we actually targeted on this side? What have we got? We got this imbalance here, which on the 30-minute. Yeah, so on the 30-minute, we trade up into this order block, come back down, or this breaker even, come back down, take everyone out that has moved their stop to break even, and now price has enough liquidity to move in the correct direction. So yeah, just a nice little analysis. It's good to be back. I took a bit of time out, which is an obvious repeat of what I've been saying, but yeah, I mean, overall thoughts for this month, we'll see. I think probably will see a bit more bullish action towards the end of the year, but if we think of like a yearly candle and the monthly profiles, I wouldn't be surprised if this month is a bit more of a consolidation month, which I do kind of feel would suit my strategy more than usual months. Mainly because when price is consolidating or like ranging on a higher time frame, you get smaller ranges, so they become more obvious draws on liquidity, and I can have a bit more conviction in my ideas and my model knowing that is the case, compared to if price is just completely expanding and we're at all-time highs. It's a bit more difficult to judge because you don't know as well which, say for example, we're expanding upwards, price is going to be pulling back, continuing up, pulling back, continuing up, the occasional sweep. So it's a bit more difficult to determine, which days are we actually going to go down to previous daily low if we're bullish, bearish even, just due to the overall sentiment in the market. And yeah, I'm just trying to think what other things. I think as well, having a week off, not being in trades last week, psychology was tested a bit more today. Nonetheless, I entered in with smaller positions. My first trade, I managed to risk quite well, I would say. But, there's obviously a bit of luck involved. Like the markets can do what the markets can do. And yeah, I think definitely some positives to take away here. I'm not sure what news we have for the rest of the week. So tomorrow, no red folder. Is there any stuff? Wednesday, well, tomorrow I won't be trading anyway. I have a doctor appointment around lunchtime, so I don't anticipate being in the markets around that time. Wednesday, possibly we got non-farm employment change, PMI, and Thursday I'm off work, so that could be a good day to properly focus. And Friday I have my work Christmas due, so I will not be trading, purely because I just know that my headspace on that day is going to be focused on the evening ahead and busy at lunchtime, probably go for a couple of drinks. So no trades on Friday. So I think Wednesday and Thursday this week are looking more comfortable than the other days. And is there anything else? think that'll be it. I think that'll be everything. So, with that being said, I'll be back tomorrow with another review. We'll go through the move as usual, and yeah, trade safe, trade smart, trade your plan, and don't be a muppet.